President Bola Tinubu has signed into law 4 sweeping tax reform bills set to redefine Nigeria's revenue collection architecture, ease the burden on small businesses, and harmonize the fragmented tax laws. With the establishment of the Nigerian Revenue Service, the overhaul touches not only on institutional realignment, but on fiscal equity, economic competitiveness, and the centralization of non-tax revenue collection. These reforms arrive at a time when Nigeria's tax-to-GDP ratio remains significantly below the African average, raising questions about enforcement, federal state dynamics, and investor confidence. As stakeholders across the government and the private sector brace for implementation, the real test will be whether these reforms can shift Nigeria towards a fairer, more efficient, and development-driven tax regime. Joining us now, we have partner Tax Reporting and Strategy PwC in person of Kenneth Erikume. Good morning. It's a pleasure to have you in.
Good morning. Thanks for having me at News Central. Looking forward to our chat.
Yes, indeed. And let's begin. We know that this is, a big move, quite historic. And across the continent, several nations have attempted to push or are pushing for that fiscal consolidation through tax reforms. And they've seen pushback. Kenya is one. South Africa is one. How has Nigeria managed this reform situation to get us to this finish line, having it passed into law?
Yeah, like you rightly noted, a lot of African countries are looking at this, and some have done it already, and then they had to roll back. Specifically, the likes of Kenya, due to an uproar on taxes that massively impact on citizens and the general masses, had to roll back with demonstrations. And we've had a similar situation in Ghana, not with demonstrations, but the government looking at easing the burden on their citizens by rolling back what they call, the World Bank, IMF driven taxes in their parlance. And some of those were, introducing things like taxes on electronic transactions with banks, which, is counterproductive from a financial inclusion perspective. Now, what Nigeria has done is a bit different, and there are many positives in terms of what government has tried to do with this bill. I think the first and most important one is the principle they've applied to ensure that the poor and vulnerable are protected by the acts, because they're now acts instead of calling them bills. So one of the things they've done, for example, is to raise the exemption for personal income tax on individuals. So you must be earning more than 800,000 naira per annum for you to, trigger any personal income tax. So you'll find out that a lot of the people who have struggled from some of the shocks with regards to the economic, reforms that the government has undertaken over the last couple of years would, get some relief and protection, because their income up to 800,000 naira every year would be exempted, and that protects the vulnerable. I think in addition to that, small businesses should celebrate as well, because what the acts have tried to do is to increase the exemption threshold of what they consider to be small businesses. And currently, small businesses are exempt from income tax, and they're also exempt from the burden of fulfilling VAT obligations. And the current definition is 25 million naira of revenue. And because of inflationary pressures and all that, that 25 million naira annual revenue is usually reached by a lot of businesses. So what the government has done, which is quite useful, is to redefine small businesses to be businesses with revenue of 100 million and total fixed assets not exceeding 250 million. So you see there that a lot of the players in the informal sector, which contributes to the economy, will also be protected by being granted those exemptions. So a lot of positives in that regard.
Right.
And I think we shouldn't forget the principle. Yeah, Go ahead.
Yeah, and I think the highlight there is that it is a people-friendly. It protects the common everyday man, and perhaps that's why we didn't see as much pullback or resistance to it. Even though there were some, resistance on some levels, on the state levels, and we saw important stakeholder engagement in that regard. But let's get into it, right? And let's start with the big picture. Now that the NRS is taking over revenue collection from agencies like Customs and IMASA, how do you see that playing out? Are there risks or overlap, confusions or power tussles that we should anticipate? And how can we work against that?
Thank you very much. What I say, and this phrase, political will, has been utilized in so many contexts that it's slowly losing its meaning. But in my view, once there is political will to drive change, then change is possible. So it all depends on how government intends to manage the process. A lot of transformation has to happen within the next 6 months for this bill to take effect. Now, as you rightly highlighted, one of the things which has occurred with the Nigeria Revenue Service, establishment is that FRS will need to be transformed to an institution that is capable of collecting revenue and taxes from various sources, as long as it is relating to the federal government. So, like you rightly said, this would include collecting, things like royalties, which are paid to the Nigerian Upstream Petroleum Regulatory Commission. It would include, any levy being charged by the Nigerian Midstream and Downstream Petroleum Regulatory Authority. It would include NIMASA. It would include customs and so on. Now, what essentially that means is that those functions have to be transited to the Nigeria Revenue Service. It's not taking away their oversight and regulatory role. It's just to ensure that there is more transparency over the collection of revenue.
Yeah.
And there is a clear link between the expenditure of those, MDAs,
Right.
relative to their revenue, and monitoring will then be more enhanced and more fiscal discipline.
Indeed, and of course this transition is very important. I believe the effective date is January 1st, 2026. We'll get into some of the other things that need to happen between now and then, and questions that are even being raised at the moment after this break. Stay with us. All right, Nigeria has 4 new tax laws as the president signed the tax reform bill yesterday. 4 of those laws we are discussing now with, we have joining us Kenneth Erikume, Partner Tax Reporting and Strategy, PwC. You've shared quite some insight, into, this conversation. And let's come to one of the laws, which is the Nigerian Tax Administration Bill, which establishes a uniform legal and operational framework for tax administration across federal, states, and local governments. Considering Nigeria's federal structure, right, centralizing tax administration sounds efficient on paper, but doesn't this, raise questions? About how much control states and local governments will have over their own revenue, and how has that been addressed? How will that be addressed? All right, it sounds like you're muted. We can't hear you at the moment.
All right, thank you very much. So it's not going to be addressed in one day, and it can't be addressed by an act, overnight. And even in well-established countries like the US that operate a federal system, the constitutional framework and how revenues are allocated continues to be a debate. But I think what the government has done with not just the Nigeria Tax Administration Bill, but also done with, the Nigerian Revenue Administration Bill, and the other bills, the Joint Revenue Board, is to ensure that 2 things happen. The first one is to allow, sufficient interagency collaboration between the states, local government, and the federal government. Remember that the Supreme Court judgment has come out to say that the local governments even should have autonomy. But even with that autonomy, there are two things that you want to achieve from a tax administration perspective. And the first one is to ensure that there is uniformity in terms of profiling individuals and assets. And I think this bill addresses that. The second thing you also want to achieve is that there is seamless sharing of information across the different agencies. So what this act does is to establish a framework for this to happen. But a lot of transformation needs to happen from then onwards. And one of the things the government is thinking about is to have a centralized database for taxpayers, to identify taxpayers, and hopefully into the future to also identify things like real estate and properties, so that there is proper enumeration of those who are within the tax band and the assets that are within the tax regime. And the next thing they will then do with that sort of sophisticated database is to then be able to profile taxpayers based on their economic activity, particularly save, spend, and investment, to be able to properly profile taxpayers. So, for example, a taxpayer who is paying taxes at the level of people who are staying in Mushin, but you see the person staying in Banana Island, then the government is able to intervene and ensure that people are paying their fair share of revenue. But in addition to that, it's a state that doesn't have capacity can then solicit the support of another state or the federal the Nigeria Revenue Service to assist them, with capacity in tax administration. The other thing that will happen is the transition of the Joint Tax Board to the Joint Revenue Board. And the Joint Tax Board historically has been more of a paper organization intervening in that space to bring the states together. But the Joint Revenue Board, based on the conceptualization in these documents, is a more empowered organization that is able to push through collaboration among states and ensure that there is harmonization of taxes. And like I said, it's not going to happen overnight, but the expectation is that the Joint Revenue Board is able to impose its decisions in those areas around tax harmonization,
right,
and is then able to dictate the parameters on which states are able to set up taxation laws. And one of the things we've been bedeviled with from a Nigerian perspective is that, in response to one funding, to fund one agency, to fund one activity, different agencies, MDAs, come up with laws and acts that impose additional taxes. So all of that will be streamlined with what the government has done with these acts.
Yeah, I mean, that's a harmonization, and a lot is changing, major structural shift. Hopefully we have the human capacity to see this through when it comes to implementation. Something that has interested many, right, is the introduction of a tax ombudsman, right, and appeal tribunal. And it sounds pretty progressive, but in practice, how accessible would these channels be, especially for everyday people and small businesses that are trying to resolve tax issues, considering, as you have highlighted, one of the sell points of this bill was the fact that it protected the everyday man?
Yeah, so this is one of the areas that people have had challenges in the past, especially if you're playing in a space where you're just, starting your business, you're with a startup, or you don't have this, sufficient literacy over taxation, or you don't even have the financial muscle to pay for tax consultants, and so on. Now, there are businesses in the past that have suffered, immensely from different tax agencies, both, state actors and non-state actors, who knock on their door every day and interrupt and disrupt their business. Now, what the tax ombudsman they've tried to make it gender progressive by saying tax ombuds. What the tax ombuds office would do is to serve as a liaison office where people with complaints around, whether they're state actors or non-state actors, intimidating them, keep giving them demand notices that they are not aware of how to respond, and that they just serve as an independent arbiter to review and resolve those complaints as long as they relate to taxes, levies, duties, or regulatory charges.
And how accessible is it? Is
So I
it
think this will be
digital? Like, how accessible is it? How
Yeah.
can the everyday man access it? Is there some sort of digitization to this system?
Brilliant question. Brilliant question. So as you've rightly highlighted, one of the things that needs to happen is a proper setup of the structure and the functions of the tax ombuds. The Act anticipates how they will be funded and ensures that they are properly funded. But there are two things that the tax ombuds setup needs to, look into, and that will depend on how government works to ensure that it's properly established. The first thing is you want, a proper governance structure that is independent and unbiased. So the selection of the leadership of that organization has to be very carefully done. The second thing you also want to establish is, because their functions is actually very close to the grassroots, to ensure that there's sufficient liaison offices across geopolitical areas, and even to states and local government level, because some of the people that will need to reach out to the tax ombuds for arbitration may not even have internet, or may not even be internet literate. And of course, I think you highlighted the most important thing. So for reach, in this age of internet connectivity and technology, it's important that there's also a digital platform that ensures that there is proper interaction of the target individuals and businesses, and able to communicate with the tax ombuds office.
Indeed, there's so much to break down with the signing of this tax reform bill, now an act, as you have pointed out. But thank you so much for your time, Kenneth Erikume, partner, tax reporting and strategy, PwC.